Welcome back. You're still tuned into Midcap Radar. Well, the stock on our radar is Neogen Chemicals. The stock is up around 20% this year so far. Company reported its Q2 numbers a while back, but there's been a lot of updates since then. And we need to understand what the demand on ground is like, especially for the chemical sector as a whole, because it has been facing some headwinds so far. We are joined by Harin Kanani, Managing Director at the company, for that discussion. Mr. Kanani, good afternoon. Thank you so much for joining us. Well, in Q2, you did indicate that your inorganic chemical segment was impacted by lithium prices going lower, but you did say it got back to normalized levels as well. Can you give us a sense of where they are heading right now? And second half is usually strong, so what kind of growth are you looking at in the second half?
Hi, thanks for having me. So lithium prices today have, like in last year numbers, the lithium prices were at a historical high, which was 6 times, 7 times what is the normal lithium prices, which have been there last 2 decades, so last 20 years. This year, again, they are coming back to what was historical normal level. So therefore, there's a very strong decrease in the prices as compared to what it was in last financial year. And to that extent, our correction is there in the top line. So even last year when we had did around 680 crores of revenue, we had said, like, on a lithium corrected price, it was somewhere more closer to 600, 610. So that is the base, kind of a good comparison point for this year. And yes, we still see strong demand in the lithium segment. So that is still continues to do well. But because of the price decrease, sometimes the numbers will reflect a slightly lower top line. So that's the level. In terms of your second question, we always usually do slightly better in the second half as compared to the first half. So even in this year, although we are seeing challenges in pharma and agro, but we expect the second half to be slightly better as compared to what we have done in the first half. Although Q3 is almost similar, but we are seeing more improvement we are expecting in Q4 as at least pharma will start recovering, and we are still watching the requirements on our requirements on the agro side. So that is still yet to recover. But what is giving us more confidence on Q4 is our Bulai chemical acquisition will start contributing more as we start receiving international approval. And we also expect our battery material demo plant to start contributing to revenue as we get approvals in Q4. So together with that, we expect slightly better performance in the second half as compared to the first half.
Right, Mr. Kanani, good afternoon. Thank you so much for joining in. You said the second half would be better than the first. You did 10% revenue growth in the first half. How much do you expect to do in the second half? And since you mentioned about your Bulai chemicals starting to contribute to revenues, how much is it contributing as of now, and what would be the revenue potential at its peak?
So at peak, depending on the price of lithium, it can contribute somewhere between 50 to 100 crores per annum. So quarterly basis, it's around, let's say, 12 crores to like 25 crores in that range. And last quarter, we had already done around 10 odd crores. So we are basically going, and we hope we'll start getting closer to this, let's say, 12 to 25 crore kind of revenue by the time we hit Q4, because we just started operation. So we got the acquisition in June. So last quarter was first quarter of operation. This quarter, we expect slightly better performance. And with approvals coming in next quarter, we feel will further improve. And then, once we have international approvals, we can also consider, whether we can add further capacity once we have environment clearances. So that will be like future growth plans, at least on the Bulai chemical, that what we are envisioning.
Okay, so you said that around 100 crore rupees on an annual basis. You are focusing on the battery chemical segment as a whole as well. From your investor presentation is what I read. So this 253 crore rupees of preferential issue that you did, is all of it going to be used in this new segment, or will it be split between the existing and the new business?
So, ultimately, eventually, it will be help us basically invest into the battery business, because currently majority of the existing capex plans, whatever we have already completed in Neogen, where we can basically reach a revenue potential of around 950 to 1,000 crore by FY 25-26. So majority of capex that has been done. Short term, we are using that fund to reduce our debt levels. But ultimately, eventually, as more and more capex needs to get done over next 2.5 years, it will go towards, let's say, to our Neogen Ionics, which is the battery business, and to some extent to support Bulai Chemicals. So these are the two areas where it will go, but majority of it will eventually flow into the battery business.
So how much are the current debt levels, Mr. Kanani, and after using some of these funds from the preferential issue, what would they come down to, and what levels do you see going in towards the end of FY24 and to FY25 as well?
So of course, whatever numbers we had, in, let's say, September, so the debt levels are significantly lower. And of course, we'll have the results where we can share more details. But more important for us is that as we do our capex in our at our Neogen Ionics, which is going to be the significant capex, where we are setting up a capacity of 30,000 metric tons of electrolyte and additional 4,000 tons of inorganic electrolyte salts. So this capacity is going to be the major capex. And our target is always going to be to keep debt equity level at 1:1.25 at max level. Of course, today they are below 1:1. But, with this fundraise that we have done, we can continue to do a capex, let's say, even of up to 1,000 crore, maintaining a debt equity level of 1:1.25. What will help also that by the time the new site becomes fully operational in FY26, our regular business of Neogen Chemicals also would have peaked and would be at peak utilization levels and generating more actively cash. So that will ensure that, we will be able to fund also our Neogen Ionics business in a sustainable way.
Okay, that's about cash flows and the balance sheet. Just coming back to the battery chemical segment, because I understand a lot of chemical companies are excited about the space. What is the asset turn and margins in this particular segment? Will it better your margin profile from current levels?
Yeah, so see, battery chemicals is usually a large volume business. It's a bit different business than a traditional chemical business. In my understanding, this is something which is more like a ROC driven business, because your volumes will be completely dependent upon the investment, and as you will do higher scale, your margins, let's say in EBITDA terms, might come down because of efficiencies. Your asset turns will also keep improving because your incremental capex is not going to require more money. So even though, for example, we increase the plant capacity 3 times, the capex is supposed to be only, let's say, 2 or 2.5 times as against 3 times capex which we are doing. So we expect, again, and this is also something which lithium will be a variable factor here. So therefore, we like to think of this business more like ROC driven, where we are expecting between, let's say, 20-25% kind of an ROC is what we are targeting. And also on an EBITDA basis with today's lithium price, they turn out somewhere around 18% odd EBITDA, which is what Neogen is today doing. Of course, this is the bare minimum. And then if you are able to add value, if you are able to do innovation or come up with high technology product more suited for India environment, then that's where we can even further improve these margins.
Right. All right, Mr. Kanani, we leave it at that. Thank you so much for joining in. Wish you good luck for the second half of the year. That was the management of Neogen Chemicals. With that, we'll slip into a short break here on Midcap Radar. Up next, we put the spotlight on Hindustan Copper in our Midcap Spotlight segment. Stay tuned. We'll be right back.
CNBC-TV18, embarking on a quarter century of excellence.
Thanks for tuning in to CNBC-TV18, and for more news and updates, follow us on all the social media platforms.